So first we're going to record on this computer. Now everything's recorded, so I can send that to everyone. Let's just check if you can see me in the chat. Let's take a look. Chat, can everyone chat? Yes, everyone can chat. Now you can. Hello, everyone. Hope you're having a wonderful day. It's pretty sunny over here in the Netherlands. Can you all hear me? Yeah, maybe. Yeah, perfect. Great. Nice and sunny over here. Always a nice change. So, awesome. Thanks, Sam. Awesome. Great. So nice to meet you all. My name's Kareem. I'm from Expat Republic, and we are a media company based in the beautiful Netherlands, and truly a wonderful place to live. Just gonna promote one of our panelists. Sorry about that. Beautiful place to live. Been living here myself for 15 years. Quite love it. And what Expat Republic does is we are a media company. We basically help expats, internationals figure out how to, relocate here, what to do, how to make friends, how to, everything from, buying a house to renting a house to, figuring out a cool, healthy lifestyle, just all information, that kind of stuff. And so one of the things that happens is a lot of people, they move here, they buy a house, or maybe they have to leave and they have a property and they want to rent it out, right? And that's a bit where things get a little bit interesting, because maybe you've played the property game a little bit, and then the buy-to-let, there's a lot of different information and rules you need to be aware of. And today we have an incredible company. We have two wonderful speakers, Egle and Robin, from an amazing company called Mr. Mortgage. They are mortgage advisors. They've been in the game for a while. Really friendly, warm, lovely, extremely knowledgeable team. Also, they have tons of lenders that they work with to really try and get you the best deal that works for you. And they actually took the time out of their lunch to speak to us today about all these great things about buy-to-let specifically and the regulations and how it works. And they prepared a wonderful presentation. Without further ado, I hand it over to our awesome speakers, Egle and Robin from Mr. Mortgage.
Thank you, Karim. I mean, that is, if you need an intro, well, there's one. Thank you so much. And thank you, everybody, for joining this afternoon. Indeed, enjoy your lunch whilst you check our presentation. If you have any questions about anything that we discuss, by all means, you can leave them in the chat and the Q&A. And then after the presentation, we will have a Q&A to discuss any of your questions there. Hopefully, I will have answered some of these questions during the presentations already. When it's a very personal question about your personal finances, I suggest to have a call later on. I'll explain a bit about how that works and how we work with that as well. Now, what I'll do is let me share my screen with you so we can go through the presentation. Very excited to share it with you guys, and there we are. In a minute, you should be able to see that. So, what we're going to discuss today is buy-to-let. And just to get it out of the way, buy-to-let, keep-to-let, investment mortgages, it's basically all the same thing, but there's different ways to get there. The investment mortgage is basically a mortgage to finance an investment property. Now, let me explain a bit more. Basically, what we're going to discuss today is how to invest in or rent out your property. So, let me first introduce our team. I'm always joined by my lovely team of Cesar, well, obviously myself, and Egle, who is joining here in this call as well as our moderator for the Q&A, and Lisa as our fellow financial specialist. Our team, we all have some experience with living abroad or coming from abroad, and especially working with clients that are not necessarily always from the Netherlands. So that's really what that gets our blood pumping. So everybody has different adventures. Everybody has a different background in what they are used to with finances here in the Netherlands or abroad as well. And that's what we are experts in, and are very excited to hear your specific story and what your plans are. Now, what we do, we are a mortgage brokerage firm, specifically for expats and internationals, and also for people that have their own companies, so entrepreneurs, and any situation that might be a bit considered out of the ordinary. That's what we do, basically. Now, we know everything about the legal and regulatory conditions for banks, of course, but also very much when it comes to what the government and the municipality allows. And also when you buy a home in an apartment, for instance, you'll be part of the homeowners association. So they have rules and regulations as well. Now, anything you need to know there, that's what we can help you out with when it comes to your finances. We work with over 30 mortgage lenders. So basically all available lenders in the Netherlands, so we can always make sure that we can find the best solution for you. We're independent from everybody and anyone, that allows us to really focus on you. Our primary focus is on you, so we don't have to meet any quota or something, so we can always find the best option for you. Now, additionally to that, we have a special position with a couple of lenders. What this means is not all lenders just give mortgages out, investment mortgage or regular mortgages to expats, international, or people with a specific situation. They don't just give it out willy-nilly, but they work with specialized firms such as Mr. Mortgage when it comes to expats and internationals. Now, when it comes to the mortgage range that we advise in, basically everything that has anything to do with a mortgage in the Netherlands. So obviously residential mortgages, so when you buy a property to live in yourself, but also buy-to-let mortgages or investment mortgages, when you want to rent out the house that you have a finance on. Also refinancing and increase in mortgage, which could also be a combination. So if you currently have a residential mortgage and you want to refinance that into an investment mortgage so you can rent out your house, or if you want to increase your mortgage, maybe to do renovations or to get some equity out of your current property, to use that as an investment for a next property that you might want to buy. In any case, we always have tailor-made solutions, but also when it comes to divorce or buy-in, which is the counterpart there. So when you meet somebody and you want to join them on the mortgage and the ownership, but also when it comes to holiday homes, etc. Anything you can think of when it comes to mortgages, we can help you out with. Now, all that being said, before we start, let's discuss what you can expect today. So we'll discuss the introduction for buy-to-let mortgages, reasons to invest, so why would you, unique financial benefits that you have here in the Netherlands that you have to consider, eligibility criteria, so what do you have to comply to and does your situation have to be able to take a step like this, the process, the timeline, a general idea of the rates and fees, and of course the Q&A at the end of this presentation. So let's get started. Good to know, a buy-to-let mortgage is not a residential mortgage. It sounds very obvious, but it's good to know. There's a couple of differences there. A buy-to-let mortgage is a type of mortgage, well, it says right there, that's specifically designed to finance properties to rent out to tenants. What this automatically means is it's not considered a mortgage to live in the property yourself, but specifically designed to rent it out. This is also what the eligibility criteria have been based on, is the fact that you're renting out your house. We'll dive into that more specifically later. Now, when you compare the two, a residential mortgage and a buy-to-let mortgage or keep-to-let, let's first look at the loan-to-value. Now, 100% loan-to-value means as much as, for instance, you buy a house for 500,000 euros, that's the purchase price, and the value comes back at 500,000 euros as well. And then you also take a mortgage for 500,000 euros. So then you take out a mortgage for 100% of the 100% loan based on the value of the property. Now, if you buy a house for 500,000 euros and you take out a mortgage for 450, that means that you have 90% loan to value. That's what that means. Now, if you compare that to an investment mortgage, the restriction, there's a bit more of a restriction there. This basically means that you can get approximately 70% loan to value when you take on an investment mortgage. So they have to input some of your personal savings to get a financing like that. Transfer tax is a hot topic, of course. When you buy a property right now for your personal use, so as your residency, then you pay 2% transfer tax. This is 2% over the purchase price. This is when you use the property for your own residency. If you're not going to use the property to live in yourself, automatically the transfer tax will change into 10.4%. Mind you, this is when it's about a property that already exists. So you buy a house that's already, the bricks are already laid, you can just move in and that's it. When you buy a new build, there's a bit of a different story. Then you don't pay transfer tax at all. We'll explain that a bit more later on as well. Now, when it comes to interest rates, again, that's a hot topic. The regular interest rates apply for residential mortgage. Regular mortgage, regular interest rates. When you buy an investment property, then the investment mortgage rates are usually about 0.7 to 1.2% higher than the regular rates. Eligibility of a residential mortgage is primarily based on your income and the property value. Also, that's the order. Your income is the primary focus in your situation. So, and the property value is then also a hot topic there. It's an important topic there. When it comes to an investment mortgage, it's kind of the other way around. Then the property is the main focus. So what is the value of the investment property? What's the value in rented state? What is the expected rental income, etc. So then the property itself has the focus in this mortgage application. Your income is also considered, but more to see if you can finance, if you can still pay for your current housing, right? So not as much for the investment mortgage. Next, keep to let versus buy to let. Now, I already mentioned it kind of. Keep to let and buy to let. It basically there's two different processes to get to an investment mortgage. Both is the process to get to the financing where you rent out your house and accompanying mortgage there. Now, what is the difference between keep to let? Buy to let is when you buy a property to rent it out. It's kind of in the name already, but let me explain anyway. So you buy it, so you don't own it yet, you just buy it from the market and then you rent it out. When it's keep to let, you already have the house and you keep it to rent it out. Keep to let. So this is a keep to let is a refinancing of your current mortgage into an investment mortgage, and a buy to let is when you buy a property and finance it through an investment mortgage right away. Keep to let is very interesting also when you already own a property in the larger cities, for instance, because there are some restrictions, and if you already own the house, then it's easier to rent it out. Then, what are reasons to invest? It's very good to keep in mind, of course, because you can, one of the reasons, and that's not stated here, but could be that you want to kind of go on the wave of the hype that you have to buy a property now and invest in it. Always, when you make big financial decisions, make sure that you know exactly what you're doing. Don't join in on the wave of the hype, but make sure that it makes sense for you financially on the long term as well, right? And there's a lot of reasons to do so. It's not just one of these. It could very well be a combination of it. So maybe you want to have rental income, like kind of a passive income that you just have a monthly and annual income based on the rental price that you have then. Capital appreciation, so the value of the property, but also things like a portfolio diversification. So if you already have investments like stock options, maybe you do something in crypto, for instance, and you also say, okay, let's diversify it a bit more and also have real estate included there. Leverage, inflation hedge, retirement income, tangible assets, also something that some people just feel more comfortable with, and the property development. All of these are different options. This is something that we'll discuss with you as well, right? So when you start considering, hey, this is might be something that we want to do, what is your goal in the end? What is your reason to invest? Because that might also make a difference in how much of your savings do you want to input? How long do you want to fix your interest rate for? Maybe you want to have a longer term investment, then maybe fix your interest rate for a longer term. Or you want to have it more shorter term, and then we can set up your mortgage accordingly as well. So all of these differences will come into play and will be considered in our advice, of course. Next, there are some unique financial benefits in the Netherlands, and it's very nice to be able to benefit from that as well. Things like that you can consider are the taxes, one of our favorite topics, of course. Now, at this time, when you own an investment property and you don't live in it yourself, so the whole house is rented out, you do not pay income tax over the rental income that you have on the property that you're renting out. This is as long as it's not your primary source of income. So as long as you have your own income based out of self-employment or employment, then it will not be considered primary source of income. Therefore, it's not taxed as an income tax. The capital tax Also, box 3, as it's also known, does not apply as long as you have the 30% ruling facility. So if you do have the 30% ruling, as long as you have that, so that has a duration of 5 years, as long as you're within that 5 years, you do not have to pay capital tax. That's very nice. Now, if you do not have the 30% ruling now, or you don't have it soon anymore, then we will help you understand what that will impact, how that impacts your investment as well. So you know, again, for the long term, what your finances will look like. Now, you do have annual property tax, so that's the tax that you pay over owning the property. And for example, in Amsterdam in 2024, this year, that is 0.0462% of the WZ value. Now, the WZ value is not a value that really says anything specifically about the value of your property. It's always a value that is the average selling price of the year before last, so kind of outdated, but the municipality uses that as a basis to charge the taxes on. Now, all of these things is something that we consider in our calculations, of course, because it very much depends on what the specific property is that you want to buy or that you already own and want to refinance into an investment mortgage. Now, then fees. That's important to know. So what kind of fees do you have to consider when buying a property? Now, as Karim already mentioned, this presentation will be, this recording will be made available to you later on. So by all means, you can check it out then more specifically. And if you have a specific situation, again, you can reach out and we will make a calculation for you. But here you can see a comparison between buying an existing home or a new build. And when you see existing home, you can see KK behind it. That's a Dutch abbreviation for kostenkoper. And what that means is the buyer's fees. So any fees are stated here are for the buyer. So when you buy the house, you pay these fees. With new build, you see VON, and that is vrij op naam. And what this basically means is that you do not pay all of the fees, the similar fees as buying an existing home. The most important, that's what I previously stated as well, is the property transfer tax. 2% when you buy it for your own residency, 10.4% when you buy a property for investment purposes. So then, for an existing home, that would be 52,000 euros. When you buy a new build home, you don't pay any transfer tax in any case. Just shortly on transfer tax, it's a common there's some common misconceptions about it. Property transfer tax is about the transfer of ownership. So, for instance, a new build has never been owned by anyone. Right? Because nobody lived in the property because it doesn't exist yet. That's why there's no transfer tax, because there's no transfer of ownership. You'll be the first owner, therefore no transfer tax. When you would be the new owner of an existing home, then you do pay transfer tax. One of the misconceptions, and there's also there, is when you change your current mortgage from your house into an investment mortgage, some people think that you have to pay transfer tax then. But no, because there's no transfer of ownership. You stay the owner of the property, but you change your mortgage from residential to investment. So you rent out the house, but you're still owner, so no transfer tax. Now, the real estate agent, when you buy a property, an existing home, then it's usually a bit, let's say 1.2% of the purchase price. New build doesn't apply. Notary, when you buy an existing home, about 1,800 euros. When it's a new build, there's about 900 euros because you don't sign the transfer deed, because again, you'll be the first owner. Valuation report is approximately the same. Bank guarantee, you don't need that when you buy a new build usually. And our fee is exactly the same, whether you buy an existing home or a new build. Now, what is good to keep in mind is the start of your rental income, because that's basically what your investment is largely based on usually. It's property appreciation, so what the value of the property will be and also will be in the future, but also that passive income, in air quotes, that is the rental income. When you buy an existing home, you buy it, you receive the keys, and you can have a tenant move in directly, of course. So then your rental income starts right away, basically. When you buy a new build home, now, of course, at first the house has to be built still. So let's say the building period is 24 months, it's 2 years. When you buy a larger apartment in a larger apartment building, then after the property is done and delivered and you fixed it all up, so there's a floor there, nice wallpaper on the walls, and then you can have somebody move in. Could be that you have to wait a bit until you can actually have that rental income. Let's say about 24 months. Now, during that time, you have mortgage payments anyway, right? Because you already own the house, so you have to pay the mortgage already. So with a new build, then you pay about 18,000, let's say a bit shy of 19,000 euros in this case, that 24 months you pay the mortgage without getting any result. Now, when you buy an existing home, of course, somebody moves in right away, so you don't have mortgage interest payments without a tenant. If you compare the two, existing home, about 65,000 euros total, and new build, about 24,000 euros. Is it therefore better to buy new build? Not always. Is it then automatically better to buy an existing home? Not necessarily. It depends very much on what your strategy is with your finances and the location that you want to invest in, of course. Again, as any other of the other topics as well, we can look into your specific preferences, your goals, and your wishes to make sure that we can set up a good time frame and a best usage of your finances to get things sorted for you. Next, then the rates. So there's a lot going around about interest rates. Especially last year, we heard, so yeah, interest rates are increasing dramatically and they have never been this high. Well, that's simply not true. You can see this graph kind of shows what the interest rates have been doing and what we can expect in the future as well. So when we look at the early 2000s, the interest rates were between 5 and 6%. Wasn't too weird at that time. That was kind of the balance in the housing market anyway. Then we saw a slight decrease, a significant decrease. Then it leveled out a bit until 2014, and then it went on the way down. Start of 2022 really. Then we saw an increase in the interest rates happening. That stressed people out. Not really for the fair reason. Sure, the interest rates were lower right now, but the financial markets kind of balanced out. We had the weird situation that at some point the interest rates were so low that you had to pay to keep your savings on your savings account, which is the world upside down, of course. And now we see that the market is leveling out a bit. The interest rates are moving to a more normal rate when it comes to your interest rates for your mortgage, but also the savings interest rates are gradually catching up there as well. Now, what does this mean? What is the projection? What do we expect over the next coming years? Right now, we see that the interest rates are decreasing gradually. Not too fast. There won't be a sudden drop in interest rates as far as we expect right now, for the simple reason that banks like money. So they won't suddenly decrease their interest rate, but it goes very gradually. That is also the expectation over the next 3, 4, 5, 6 years, maybe, that the interest rate will keep on decreasing, and they won't go back to the 1.5% that we had a couple of years ago. But again, that's also not a really logical way for the market to move into. Now, this is something that will guide you through and keep you always updated on what the interest rates are doing. And I've lost my crystal ball in the canal here, so I cannot predict the future. But we do check what happens in the market, what banks do, how their strategies are when it comes to interest rates. So we can always give you advice about what the expectation and the forecasts are. We work with about 8 lenders when it comes to investment mortgages. I expect that more lenders will understand that this is a very lucrative option for them as well. So there will be more lenders on the market expectedly. What that in turn means is if there's more lenders on the market giving out investment mortgages, that means that they will compete, right? So that is a good thing for you, because then their conditions will be better. Interest rates might decrease a bit if it gets even more and more common practice for lenders to do so. So it's definitely something that you can benefit from. Eligibility criteria, very important, of course. What do you have to do to be able to secure an investment mortgage? I mentioned before, income. Your income is important, not the most important thing, but your income is important because they want to know, the bank want to know that you can still provide the necessary payment for your current living expenses, right? So the property that you live in yourself. Then also the housing cost, what I just mentioned, liquid savings. So what kind of savings do you have readily available if something happens when you have a vacancy in your property, like somebody doesn't live in the property and you have to wait, you have to look for a new tenant for 2 or 3 months, can you cover those payments as well? And you'll be a real estate investor. So if something is wrong in the property, so maybe some piping bursts, so you have to pay for the repairs of that property, right? So that's also something that you have to have some savings available for. The loan-to-value ratio. As mentioned, when you have an investment mortgage, then the maximum loan-to-value ratio is about 70%. How this really works is the property value of a property when it's rented out is usually a bit lower. So let's say you buy a house for 500,000 euros. Then if you have it on open market, so anybody can buy it and live in it, also for residentials, then the value is 500,000 euros. If you start renting out your house, the property value is a bit lower. Let's say, this isn't standard calculation, but just for the sake of this explanation, let's say that 90%. So the property value then is 450. Now, and 450,000 euros will be considered 100% the value of the property for the investment mortgage. From the 450, you can finance about 90% maximum. The return that you can get a mortgage, an investment mortgage, 90% of the investment means you can 400. And that's where that comes in, that your loan to value is about 70 to 80% based on the actual purchase price. I know this is a lot of numbers. You don't have to know this is just an explanation or example. And again, we can discuss what your specific situation is with this variety of lenders when we get there. I just heard from a colleague that the connection is a bit shaky. Apologies for that. If something put it into the place we can sell any things that you did. Yeah, and in any case, this presentation will be shared with you.
Hey everyone, do you hear me? Robin, do you hear me or is it me? Am I? So I'm clear. Okay, so I'm clear. I think Robin, maybe it's your mic or internet on your side. Hey Robin, can you hear me? Yeah, I think it's Robin's audio. And Robin is frozen. I think he's coming back. Yeah. Okay, awesome. Sorry for the technical. Yeah, definitely the mic. Yeah.
Me.
That's okay.
We're
also wonderful to have lucky to have everyone. Yeah. We're working on it. We'll be there in a couple of seconds, guys.
Thank you for your patience.
Of course, our pleasure, Robin. Thank you for this awesome information. And there's still a boatload of questions coming in. I'll let you continue with the presentation.
Let me just get it up at this
sure
laptop right here. Karim, could you tell me, is there a specific slide I should go back to?
Yeah, if you maybe just open the slide deck, I'm more a visual guy. I must say, but you already know that about me.
That's a very sweet way of saying that you didn't pay attention. No.
Okay.
Can you see the share screen?
Yeah, keep going. This one was very good. What slide number is this?
Let's see.
Yeah.
We were right here. This is number 11.
Yeah.
Unique benefits. So this was about the tax, and we discussed this bit as well.
Yeah.
Then we had the rates and what the interest rate.
Yeah. Eligibility requirements. That's where you were. There you go.
Right.
Perfect.
Cool. Thanks so much, Karim.
No worries. Thank you.
Everybody for your patience and flexibility and understanding. All right, let's take it off here. Variables to be taken into account based on what your eligibility will be determined on. Income. So income is your income. So your employment income or self-employment income isn't the main factor here. But it is important because the bank will want to know if you can actually afford the current house that you're living in. Also including the housing cost, of course. You need some liquid savings, so readily available assets to be able to cover when the property is empty for a minute, right? So when there's vacancy in your property, you're not renting it out for 2 or 3 months, looking for a new tenant, then you have to be able to cover those mortgage payments, of course. And you'll be a real estate investor, so you have to maintain the property as well. If something breaks in the house, you have to pay for the repairs of the damages, get a new refrigerator or something. The loan to value ratio is an important thing. The value of a property, there's different ways to look at it. So let's say you buy a house for 500,000 euros. The value in rented state is, for instance, 90%. Now, that's not the standard calculation, but let's say it's about 90% for the sake of this explanation. This means that the value in rented state is 450,000 euros. In turn, you can get about 90% of that rental value as an investment mortgage. So that means that your maximum mortgage for an investment property will then be about 405,000 euros. That's where the 70 to 80% comes in, maximum mortgage that you can take out. So the rental value is a bit lower. You can take 90% of that based on the value of the property. This isn't standard for everything, because the expected rental income is also part of this equation. So what is the amount of rent that you can charge for this property? And therefore, what is your mortgage capacity? So that all are different variables that will come into play. And of course, the cost for the buy-to-let or the investment mortgage itself. So what is your monthly mortgage payment? And does the rental income cover that comfortably? Because that's one of the requirements too. All right. The process and the timeline. So how does it really go? So let's say you start this month. First off, check in with us, what your situation is. We'll discuss what your goals are, what the reasons to invest are, and then we check what your eligibility is. Then also we'll discuss what the best strategy will be. So do you already own a property and you have to input savings? Do you want to increase your current mortgage to cover some of the payments or input of savings? What kind of savings do you have available? Do you want to use it all now? Well, all of this is something that we'll discuss. And in what location do you want to buy as well? Now, when you know all that, when you know what your range is approximately, if you know where you want to buy, then reach out to a real estate agent to help you find property and more specifically to put in an offer on this property. When you find a property and want to put in an offer, every time that you find a property, let us know. We will redo the calculations. And when you want to put in an offer, we will try to optimize your offer together with your real estate agent. We're not a real estate agency ourselves, of course. We focus on the financing, but we can set up statements that we share. Well, yes, this and this person can finance the property, and that gives more security to the seller, right? Now, when the offer is accepted, an appraiser will visit the property to determine the value in rented state, state what the expected rental value, rental income is, etc. Then when that's all done, we'll take care of your mortgage application. You don't have to go to the bank. We'll take care of all the communication and the administration with the bank and get your mortgage applied and approved as soon as possible. I know usually banks say it takes about 4 to 6 weeks. I'm not entirely sure what they do the rest of the time, but usually it can be done when we have all the documents ready in about 2 or 3 weeks. So just to give you that reassurance as soon as possible. And when the mortgage is approved, then you can go to the notary to receive the keys of your new house. And with an existing home, you can have a tenant move in basically the same day if the property is ready. So that's basically kind of the timeline, how it works. Now, of course, it depends on how long it takes for you to find a property and when you can actually have a tenant move in, but this is the baseline right here. Now, your return on investment, that's very important, of course. Now, these are just 2 examples that I'm showing now. And this, again, it very much depends on the specific property that you're buying and what the options are. Now, for instance, when you have a purchase price of 315,000 euros, the expected rental with an expected rental income of 1,386, very specific, the input of your personal savings are about 100,000 euros. Again, considering the input of savings based on the maximum loan to value, and then your return on your investment is about 4.27%. When you look at an example of purchase price of 600,000 euros, expected rental income 2,000 euros,
Then input of savings, input of required funds is about 264 with a return of 3.38. Is this always the case with these specific numbers? Not necessarily, but it's just to give you some insight here as well. It depends on what your rental income is, what the interest rates are that you have to pay as well. Our pricing. So we're nearing the end of our presentation. Our pricing is when it's a buy-to-let property. So you buy it from the market and then get an investment mortgage on it, is 3,199 euros. We always start with a small down payment of 299 euros to cover the hours that we put into the financial analysis, our deep dive in your financial situations. What can you get? What is your current situation, current housing situation? What are your plans, etc. We'll discuss that in a call of about 45 to 60 minutes. So we have all the time we need to explain everything, discuss different scenarios, and show you what your options are. There's not just one thing that we do just once. It's continuous through the whole house hunting process. We'll guide you through that to make sure that you always know exactly what you can expect and what the input of your savings would have to be as well. Obviously, you get all the calculations that you need. There's no limit there. So if I do 3 calculations and you have your property already, very good. If it's 627, all good. That's all included in that service, of course. And of course, we'll take care of the mortgage application, as mentioned, with the bank that has the best condition and the best interest rate for you at that time. We'll also include a mortgage, a financial advisory report to show you, well, if you go for this mortgage, what does your finances, how do they look, and what kind of risks might you be subject to if you lose your job or if you get disabled or anything else. We'll discuss that with you as well. Now, when it's a keep to let, so a refinancing from a residential mortgage into an investment mortgage, then our fee is 2,899, again, with a 299 down payment. So in this case, just an example, 299 at the start, and only when everything is taken care of, the 2,600 euros is charged. No cure, no pay. Same process applies here as well. So thank you. If you want to schedule an appointment, we always start with an introductory call of about 10-15 minutes. You can scan the QR code, or you can just go to our website, www.mrmortgage.nl. And you can see a very nice little button there, schedule a free call. You can schedule a call for whenever you're available, and then we'll discuss your specific situation, your goals, and then a quick eligibility check, and then we can proceed to the financial analysis. So that's about it. Now, I discussed quite a bit, and there are undoubtedly some questions. So what I'll do, and yeah, Karim, you're there too.
Yes, I am. Would you like me to go through some of the questions?
Sure. Yeah, by all means.
Would be delighted to. What is the 30% ruling? Oof, love it.
What is the 30% ruling?
Yes.
Well, that leads me to think that you might not have it, but let me explain. So if you work in the Netherlands and the company that you work for basically said, well, we'd like to have you in the Netherlands, so we have you, and we want to use your knowledge here in the Netherlands to help our company, then you're considered a highly skilled migrant. And that means that you were brought to the Netherlands, invited here to with the company here in the Netherlands to work here, to use your knowledge here. This is when your employer can request the 30% ruling at the government. So then basically, because you bring your knowledge here to the Netherlands, then the tax authorities say, sure, for the next 5 years, over 30% of your income, you do not have to pay income tax. That's very nice, of course. So that's basically it. Over 30% of your income, you don't pay income tax. Also, you don't pay any tax over the assets that you have. So when you have savings over 50,000 to 60,000 euros now, you have to pay taxes over that. But as long as you have the 30% ruling, that doesn't apply.
Cool.
I hope that.
Yeah. So it's 30% of your income is shielded from tax. However, I think they've started to phase out. It's not the full 30%. I think the first year is like the 30, then 20, then 10. So it's correct with, yeah, exactly. So it's a tax advantage for highly skilled migrants, pretty much.
Good.
Awesome. Thanks so much. Which mortgage will apply if I'm buying a house where I'm going to live in, but will rent out part of it, for example, the upper floor?
Very good question. A residential mortgage, then you have a regular mortgage, but make sure that it's well set up correctly. So if you call a bank now and say, well, hey, I bought a house, I want to mortgage with you, but I'm renting out a floor or a room, then we'll say, no, please don't. The reason why is tenants that you have in your house then will have certain rights after 2 years. So if they live in your house for 2 years, and then you decide, okay, now I want to sell my house, then the tenant can say, no, I don't want to leave because I have my rights and you cannot evict me. This is what stresses banks out. So they will then say, okay, sure, but if you want to sell the house or you have to sell the house and the tenant has to keep living in there, what I just mentioned is if your property is rented out, the property value is lower. So it could be that if you have to sell your house, the value is lower than the outstanding mortgage, so you have a remaining debt. Now, all of this is something that the bank wants to prevent. So yes, you can rent out a room in your house when you have a residential mortgage, but make sure that you have the contingency that if you want to sell your house, that the tenant is okay and moves out. Give him some time of 2-3 months, for instance. At this time, that is still possible. If you're renting out a room, make sure that you're always updated on the rules and regulations within the Dutch law, because the government is considering making those rules more strict. Right now, residential mortgage is possible. Make sure that you're well taken care of and you wouldn't be subject to the risk of the tenant staying put and you cannot sell your house.
Awesome. Great, thank you. Can you give a comment on changing rental regulations? Since 2023, a lot of real estate investors are getting rid of properties because of it. Which properties are expected to still deliver a profit? Maybe if you could, and just to add to this, because is this actually true that a lot of real estate, that people are really not doing this as much? Because I think you would have insight into that.
Yeah, so it's a very good question also. I'm not just saying this, it is actually. The thing is, there are plans to make it more strict. Right now, the tax ruling has changed a bit. Before, it was very interesting, and the tax implication of you having an investment mortgage wasn't too big. And for real estate investors that have a lot of properties, it could be, we see it a bit, that they sell part of their portfolio and just realign the portfolio diversification, right? So they might sell something and invest in something else. Is that automatically that it doesn't make sense to buy anymore or to invest in real estate? Not necessarily. There might be rules and regulation coming in, I expect sometime next year, if it happens then, because still the government is forming right now. Now, as of yesterday, it came into the news that it will take more time. So I don't expect a sudden change in the rules and regulations there just now. When is it a good thing to invest in real estate? What property is interesting in real estate to invest in? It's tricky to say. Every property is different, every location is different. Larger cities are usually interesting to invest in, but they have some restrictions as well. So that depends so much on what your plans are, where you're located, what you're planning to do. Basically, what I would suggest is when you consider this investment, be kind of flexible and keep check of the current events right now, what new rules and regulations will be as well. We are always updated on what is happening now, so we can always during the whole house hunting process, and something changes in the legislation, we keep you updated so you know if it still makes sense to move forward with this investment. As of yet, yes, it does. In any case, some real estate investors might already just want to prepare for something that might happen, just because they have more investments going on anyway. So what happens is, could be that more of these investment properties will come onto the market for starting investors. So that means that there might be a bit more availability of properties that might be interesting to rent out.
Awesome. Thanks, Robin. This is a really great answer. Thank you. Can you explain again the mortgage interest without tenants for newly built? It's not clear.
The mortgage interest rate for tenants, for property without tenants or new build. So when you're not renting out the house, basically, I understand. Correct?
Correct.
Yeah.
Not yet, at least.
Yeah, so then it would basically whether you buy an existing home or a new build, interest rates do not vary too much. That's pretty much the same. And the interest rate is a regular interest rate. So when you buy a new build or a property now for your own purpose, and you fix your interest rate for, let's say, 5 or 10 years, and you finance 1%, the interest rate is somewhere between a 3.7 and a 4.2. So that's the interest rate that you pay, and you get a tax benefit over part of that. Now that is residential mortgages, so that's another topic than investment mortgages, of course. But that's about the interest rate. And I'm curious if the question was actually intended for the interest rate or maybe the transfer tax, because those are two different things. Maybe
Let me recheck it.
the
I think it
question-
was really very the mortgage interest without tenants for newly built. With
So
they specifically say the mortgage interest.
Yeah, and then for tenants for a new build.
Yeah, so it's new build,
Yeah.
no tenants yet, and you're still planning to buy to let, right? So it's
yeah, no.
I think they're buying it as a buy to let. The
Yeah,
property's probably not built yet or
Yeah.
nearing completion, and they have there's no tenants, so
Yeah.
I think that's what
that makes a lot of sense. Thanks for the clarification, Karim.
my pleasure.
So basically, you have an investment mortgage without a return just yet. So you pay your mortgage every month, and you don't get anything back in the sense of rental payments because there's no tenant in there. So for the period of time until the property has been delivered, so the construction is done, and somebody can move in, then your return comes in, right? So then your profit will start. Up until that point, you have to consider that you don't have any profit over your investment during the construction of the property. So that's, I think, so then you have to consider that in your budget plan, that you know for the during the construction of a property, you have to pay for the mortgage. You don't get anything back, and only when it's done, you get the return, you get your rental income.
But I think if I understand correctly, it's not the full mortgage of the full property, right? It's kind of a phased, you pay for whatever's built, in a sense, that part of the capital.
Basically, how it works is, let's say, let's use the same example. You buy a house for 500,000 euros. I know new builds is usually a bit more, but just for the sake of the calculation, explanation. So you have a 500,000 euros mortgage, but you don't spend that full because the constructor, the developer, will only send you invoices about part of the building that they're doing. So it's usually about 15% steps every time. So what happens? You have a mortgage for 500,000 euros to finance the property. This is all will be put in a so-called building deposit. This is kind of a savings account in your name at the same bank that you have the mortgage with. So 500,000 euros there. Let's say the interest rate that you pay is 3.5%. Let's say 4% on this on the mortgage that you have. Now, as long as you have the building deposit and you also get a credit interest on that building deposit because it's kind of like a savings account. This interest rate is usually the same as your mortgage. So basically, as long as you don't spend anything out of this building deposit, the percentage of interest that you pay and that you get is the same. So that cancels each other out. Now, from the first point that you start paying something, so let's say the first payment is 100,000 euros, 20%. Then the amount in the building deposit is only 400,000 euros, but your mortgage that you pay is still the same. So that means that you get back a bit less of the interest rate. So that means that your payment increases a bit. So with every payment that you do out of this building deposit, your monthly payment for your mortgage increases a bit. So then indeed, phase by phase, your monthly payment for your mortgage increases until it's done, and then you start paying the full amount, and then you get a rental income as well. So indeed, it gradually increases your mortgage payment for your new build property, regardless of it being investment or residential, by the way. That's all the same.
Great, thank you. Oh, the barrage of questions, Robin. Thank you for your excellent answer on that one. Oh boy. Okay. Okay, great. So in terms of is the transfer tax exempt for a certain age and below? So is there kind of transfer tax Exemption is transfer tax exempt for a certain age and below. Yeah, that's the actual question.
There is, but only if you use it for your personal residency. So only if you're under 35 and you buy a house for up to 510,000 euros this year, you don't have to pay transfer tax as long as you live in the house yourself directly. If you use it for any other purpose, renting out or whatever else, then you automatically have to pay 10.4. So 0% transfer tax when you buy a new build, 0% transfer tax when you are under 35 and buy up to 510 and you live in the house, 2% transfer tax when you are any other age, any other purchase price, and you buy it for your own use, so residential property, 10.4 when it's investment or any other use.
Cool. Thank you. So that was answered. Thank you for the perfect presentation, Robin. I would like to...
those kind words. I'll take that. I'll frame it and show it to Noel, for sure.
Yeah, I would like to ask, are the fees, interest rates, timelines same when I would like to buy a buy-to-let on behalf of a BV which I own? So actually we get this BV a lot, that the BV is actually buying the buy-to-let.
Yeah.
Anything you can maybe just give us a quick an overview of that timeline, cost, conditions, issues, because I see this question come up a lot actually.
When you're self-employed, you have a BV and you want to buy a house within the BV, it will be considered a corporate loan. It's a completely different scenario, a completely different story as well. If anything else, I want to be honest there, we advise and guide people in buying a property as consumers or as a person yourself, so not from the entity of a BV. Also, it's very good to keep in mind if it actually makes sense to buy it as a within the entity of the BV. A corporate loan usually has more strict rules, so you have to input more of your savings. You have to show that you have a long-term good results of your BV as well. So it might actually make sense to not buy it within the BV, but as your personal as a person, and then use your BV income to finance the investment property. When it starts making sense to buy it in a BV is when you really want to expand on your portfolio. So when you go over 3 or more properties that you're renting out, so 3 or more investment properties, then you'll be considered as a professional real estate investor, and then it starts making sense to finance it through a BV, because you have other properties that can be considered as collateral and the rental income you have there as well, so you can easier finance other properties as well. When you buy a first, second, or third property, then it doesn't really make sense to set up a BV and then buy it through there. Then it makes more sense to do it as your personal entity, not the corporate entity.
Cool, thanks. How does it work if the property that you are interested in, if below the minimum of the point system that exists in Amsterdam? Is the mortgage also different? Yeah.
Yes, it will be. The point system is not necessarily only different in Amsterdam. It's a national thing. The point system, just for everybody to kind of get an understanding what that means. You have 2 ways of 2 kind of categories of renting properties that are rented out. You have social housing or rent control, it's also known as, or commercial housing. When it comes to social housing, this means that there's a certain point system, and you get points for square meters, how energy sufficient the property is, the location of the property, even how nice are the tiles in your bathroom, in the kitchen, for instance. So all of these little things, how do you have a cooker in your kitchen, or is it still the 2-tap thing, right? So all of these things make a difference in how many points you get. As of this year, the cap is 186 points. What this means, if you get under 186 points on this property, you're automatically in social housing. This means that the rent is controlled, so you cannot exceed a certain amount of rent. Top of my head, somewhere between the 800 to 850 or 1,000 euros approximately. Usually, and this is not the case for every property, of course, but usually it's the case if you have a property that is within the social housing range, then the investment doesn't really make a lot of sense because you have to usually input quite a lot of savings and the return is less. When you are over this 186 points, then it's commercial housing, so you can charge whatever you like. Whatever you like, of course, what the market accepts, because you still have to be able to rent out your house, of course. But that's the division there. So when you are exceeding this 186 points, then it's easier to get a profitable property, profitable financing on this property. Under it, it's very unlikely that you actually make a profit. Therefore, a mortgage will not be provided as easily by the bank because the bank always wants to be sure it's an investment mortgage. Therefore, you have to make a certain profit. Otherwise, the investment doesn't make sense and the bank won't agree.
Thank you for the very complete, good answer, Robin. The ROI presented in the example at 4.27% is annual over the investment value of the property. Is that like the compound, like return per year, I think?
Yeah, correct.
Okay.
And again, very basic example, of course.
Yeah. And it's not, I mean, that's just an example you gave. I mean, there's tons of examples where it could be more, but it could also be less, I think, right? Depends on what.
It very much depends on the rental income that you get, how much savings that you actually input. It depends on a lot of factors, but just to give you a very baseline example of what the approximate return is. So it's not 1%, it's also not 15%, but we're more in the range of let's say 3.5 to 7% range. Yeah.
Okay. And do you guys actually advise on people when they have a property? Let's say they come to you with a property, be like, hey, this is the property.
Yeah.
What do you think? Is this a good deal, or should I not do this? Like, do you guys give that kind of advice, or that's a bit outside the scope of your service?
Well, whenever we see a property and we see, well, there's the tiles are coming from the wall, and we will see that. So whatever we see, we will point out. But it's not our primary core of our advice. Our primary core is in the financing. When it comes to it's kind of a joint effort in the end. I would strongly advise to work with the real estate agent because they will be able to give an estimate of the value of the property. Usually real estate agents work together with appraisers directly as well. So they can check, okay, what is the expected rental income? Usually that's what they'll do. We do have contacts with appraisers as well, of course. But to get that specific amount, if it's a good deal, that is, we can determine if it's a good deal for you financially if we have an estimate of what the value is in rented state and what the expected rental income is. When we have these two estimates, then we can advise you on if this deal actually makes sense financially to you. Any other case about the specific to determine or to give an estimate of what the value in rental income is, that is the expertise of a real estate agent.
Okay. But I think now what they do is they can just book a one-on-one with you and you can guide them through that, which real estate agent to go to and what to do. And okay. Yeah, just because, okay, that's perfect. So
we have a network of real estate agents, appraisers, banks. We're independent, and we're nice people. We can work with anybody, but we have a network of people we enjoy and we know our clients enjoy working with as well.
I can definitely attest that you guys are wonderful people, not just nice. So that's for sure. Amazing question. Thank you for the answer. This is very interesting, actually. What is the requirement for ZZ payers for the income requirements in the buy-to-let or keep-to-let mortgage?
Very good. Yeah, it's indeed a very good question. When you're employed, just with an employment contract, it's pretty black and white. It's pretty standard. Well, this is what we can and this is what we cannot use. When you're self-employed, it's more subject of our explanation to banks and what the possibilities are. Usually, best case scenario is to have 3 years of history as a freelancer, basically an entrepreneur, self-employed. 3 years is the best. 1 year, we can consider it when you already have history in the same field. So when you're a graphic designer and you've worked for the same company for 4 years, and then you decide, well, now I want to do it on my own. You have 12 months of history. There could be possibilities. Best case scenario is to start from 2-3 years, because then you can show that you have in-depth knowledge of the market, and you can hold your ground in as being self-employed as well. And so you know the business, you know the market, and you can navigate through that and you can show that in your results. That gives the banks more security, so they're more likely to accept your mortgage application. So 2-3 years is the best. 1 year, depending on your situation, there could be possibilities.
Cool. Thank you very much. This is an interesting question also. Considering all the costs, what is the minimum amount you can get into buy-to-let investing?
Wow.
You know, so when people come to you, like,
Yeah.
what's that bag of money they gotta have? Or, yeah, I guess you see all sorts, so maybe you can advise there.
Yeah, I do see all sorts. It very much depends on where you are buying. So I could say 100,000 euros because then you're in the range of around, let's say, 350,000 euros that you buy. But then the thing is, if you buy in the Amsterdam area for 350,000 euros, then you're harder. It's harder or not possible to rent out the house, right? Because there are restrictions there. If you buy for 350,000 euros a bit more in the country, then you have more flexibility there because the value of the property is different. I would say if it's a buy-to-let, so you start on the housing market and you don't own a property yet and you want to get into the buy-to-let market, somewhere between 100 and 150,000 euros available is kind of a baseline. When it's keep to let, so when you already own the property, it's a whole different story altogether, because then you already have the house, you already repaid on the mortgage, so then the changeover is less intense, so you have to input less of your personal savings usually. So it really depends on your situation. Buy to let, want to get into the game, let's say 100 to 150,000 euros has to be readily available to purchase, and then make sure that you always have this financial safety net for yourself, so you can always fall back on when you don't have income or you don't have rental income.
Cool, thank you. Yeah, it's 101. You want to do one more,
Sure.
Robin?
Yeah, let's do the 2 or 3 more. That should be fine.
Oh, this one I love. No, if I refinance my current mortgage and use the money, the equity, to buying a new property or rent, the refinance mortgage be converted to a buy-to-let mortgage? So basically,
One more time.
Yeah, sorry. So basically, this guy has a house,
Yeah.
right? Now he's refinancing. He's going to take that money and he's going to want to use it to buy another property.
Yeah.
Talk to me about that.
Yes. Very good. Well, this is actually one of the examples that I gave at the very start of the presentation. So that's one of the things that's could be a very nice thing. So you already own a home. You have equity in the property. So let's say you have a mortgage for 450,000 euros, and you know the value is 500,000 euros. Then you can increase your residential mortgage. Now, the interest rate that you would get on your residential increase is the current interest rate value. But then you still increase your residential mortgage, so you get the residential interest rates. So let's say about 3.5 to 4%. Then you can use that equity to part finance the new property, the investment property that you buy. What you then prevent is having to pay that significantly higher interest rate for the amount of equity that you use. So it's a very interesting point. It reduces the amount of savings that you need, and it could potentially decrease the amount of investment mortgage that you could take that you have to take out, which it could be a nice thing. Investment mortgage interest rates are higher than residential mortgage, so yes, definitely fair to investigate. It's also something that combination, make sure to work with the same financial advisor for both. The thing is, if you increase your residential mortgage, then you also have to show that you can finance that. And that in turn has a certain impact on your investment mortgage options, right? So if you increase too much, that might mean that your investment mortgage options will reduce and you still cannot find that, get what you need. So in the end, it's good to find that balance where you can optimize your current mortgage and make sure that you don't pay too much savings or interest rate on your investment mortgage. Very interesting. I like the creativity, and that's definitely something that I feel that we can work together very well, because this is exactly where we nerd out. Basically, this is where we go crazy. Yeah.
Awesome. Wow, thank you so much. I think it's past the time. What do you think, Robin? Shall we let everyone get back to their day or?
Yes. I hope everybody enjoyed the lunch. Now, if any, I know there's more questions here. There is limited time indeed, and what I suggest is if there was a question that you want to have answered and you didn't get the answer right now, feel free to schedule a call with us. As mentioned, the introduction call that we have, scan the QR code or go to our website, mrmortgage.nl. You can always schedule a free call that's 10 to 15 minutes, and we always have the time to discuss your situation and let you know exactly how it works. The 10 to 15 minute call is always free of any obligation or any cost, because we like to share information. I'd rather you have the right information than that you read something online that doesn't really make sense. If that's the case, by the way, feel free to schedule a call with us as well, so we can either debunk what needs to be debunked, or maybe just give some nuance to the information shared. So excited to talk to you guys.
Awesome. Thank you so much, and we'll definitely send out the recording. And I've put the link in the chat for anyone who's interested in booking an appointment directly. So feel free; it's a clickable link. You'll definitely get the recording. And thanks again to our wonderful speakers and the great work that they do for the international community. And we'll definitely see you all in the next webinar.
Karim, thank you again so much for hosting this. As always, it was wonderful. Again, as always, enjoy the rest of your day, guys, and talk soon.
Thanks so much, everyone. Bye-bye.